weather forecast today?
Today's forecast, a lot of sunshine, blue skies, marine clouds. Just a perfect day to go outside and relax. That's your forecast. We'll be right back.
Yeah, sunny days, sunny days, sunny days. No clouds in the sky, but I get away. Feels like it's been a freaking...
Welcome back to Contracts and Cocktails. I'm Kelly Bowling.
And I am Carolyn Smith, and we're with the Coastal Estate team. And today we're going to be talking about questions from buyers.
Yeah, common questions that buyers have that
Yes.
maybe they've never purchased a home, or maybe it's been a long time since they've purchased a home.
Right.
You
Or
know?
maybe they didn't get their questions answered last time and bought a home without knowing these things.
Right.
And so, yeah. So we hope you'll find it super informative. And if you have any questions as a buyer, definitely reach out to us and we'll include it in our next. We're not going to fit everything, all the questions.
There's so many.
Yeah, there's so many. So we're going to answer the ones we can.
Yeah. So the first question is, what is the first thing that I should do if I decide I want to buy a house?
Yes.
And so the very, very first thing is not to start searching for homes online, although you probably will be doing that.
Yes.
But you really need to get a pre-approval for a mortgage, because unless you have cash money in the bank, you need to know how much can you afford to buy, how much you qualified to buy.
Yes.
And you might have excellent credit scores, but if your income is low or your debt ratios are too high, you might not qualify for what you think you're going to qualify for. Or it might be the opposite. You might think, oh, I can only afford a $300,000 purchase, and then come to find out you can actually afford maybe double that. I've had this happen with buyers before.
Yes. And sometimes people have a number in their head, but they have no idea what the payment is that equates to that.
Right.
So they don't understand it's principal, interest, taxes, and insurance. And then you need to add in your HOA or condo dues or whatever.
Right.
But they don't know. And so they just say, oh, I could buy a $300,000 house. Or 300,000 sounds good, but they have no idea what that is on a monthly basis.
Right.
Yeah.
So that's the very, very first thing that you should do.
Yes. And we have good people we can recommend. We always like to recommend local lenders. And
Yes.
yeah, so we definitely think that's the first thing. So the second question is, when you're under contract, people will say to us, or before they go under contract, well, what if I buy this, go under contract on this house, and then I change my mind and I decide this is not the house I want to buy, or something happened or something changed. We do have contingencies. So the contingencies are the things that let you out of the contract, like an inspection contingency.
Yes, that is the main one. That is the get out of jail free card.
Yes. We always call it that, the get out of jail free card, because really you can just change your mind.
Yeah. You don't have to have anything go bad. You don't even have to actually do the inspection.
No.
As long as you're within that window,
Yeah.
you can see a shiny object somewhere else and decide I'd rather buy that house instead.
Yes.
And that does happen. And people are like, I feel so bad. Why?
Yes.
It's okay. You're allowed.
Yes. So you can change your mind and you can get your money, your earnest money back. And the other big one is the financing contingency. But you have to remember the lender is not going to just write you a letter because you changed your mind.
No.
You have to literally not qualify.
Right.
Because the lender, it's sort of fraud on their part if they write a letter and it's not for a real reason. So don't count on your lender to just write you a letter saying, oh, Joe Smith didn't qualify, so I'll write him a letter now. No, you have to truly not qualify.
Absolutely. So the next one is, how much money do I need for a down payment if I'm going to buy a house? And there is no straight answer on this. It really depends on what type of financing are you going to be using.
Yeah.
So if you're going to have a VA loan, you can finance 100% of that loan. So you don't need a down payment. You just have closing costs at that point, unless you can get those paid for by the seller too.
Sometimes you can roll those in.
Yeah, this is true. And if you're FHA, typically you're putting down 3.5%. That's pretty standard. And then if you are doing a conventional loan, there's all sorts of programs. So 5%, 10%, 15, 20. How much do you want to put down, really?
Right.
Obviously, with both FHA and conventional loans, if you're putting less than 20% down, you're going to have mortgage insurance premiums that you have to pay.
Right.
So you have to take that into account. What's better? So if you have money to put down, it's always a good idea. And it makes your offer stronger too.
Yes. And you have to remember with FHA now, the PMI, the private mortgage insurance, lasts for the life of the loan.
Yes.
So even if you paid off enough or you make a big payment or your house appreciated and your equity is more than 20%, you can't get rid of the PMI with an FHA loan without refinancing.
Yes.
But a conventional loan, usually it's 2 years you have to keep
Somewhere
the
around
PMI.
there, yeah.
And then after that, you can go in and request that the PMI be removed and they do a new appraisal, or if you've met the requirement through paying enough down.
Right.
So, yeah, that's important. What is earnest money? How much earnest money do I have to put down? So that really depends on whether you're doing a financed property or cash. And it may seem counterintuitive, but if you're purchasing with cash, typically the buyer or the buyer's agent is going to want a larger earnest money deposit. And earnest money is the money that you're putting down sort of as good faith to say, I'm going to be buying this house. And remember, that comes off your cash to close. So it's actually a credit towards your down payment.
Yes.
So you want to make sure that you're aware of that. It's not extra money. It's counting as
This is true because I get that question also.
Yeah.
Like, where does this go? And it's always towards how much money you need to bring to the closing table. It's always credited to you at the end.
Yes. So, and then for financed offers, sometimes a buyer will take seller will take 1%. You can put 1% down, which is sort of unique to our area, I think, because in South Florida, where I lived before, they required more. Some sellers will want a larger, maybe up to 3%. So you sort of have to feel that out. You don't end, if you're in a multiple offer situation, putting more down as your earnest money makes your offer stronger.
How much skin do you have in the game?
Yeah.
Yeah, if you have a lot. And then, you might even be asked for an additional deposit after your inspections are over.
Yes.
Which is above and beyond that, 1 to 3%. So keep that in mind. Like if you have... And of course, like if you're going to be a veteran and you're using a VA loan and you're financing 100%, well, they can't really ask for a whole lot for earnest money because you're only going to have closing costs. Then you're going to be getting money back at the table, which does happen sometimes. So
usually they'll want like $500 or something like that just to show, hey, I put $500, but then you get that back.
Yeah.
So
the next one is, what does my credit score need to be to qualify for a mortgage? Well, it really depends. So FHA, I believe they will lend down to as low as 580 in some cases.
Yeah.
So that's doable. And then conventional is
get your credit score up, people.
Conventional is 620 and up. And VA doesn't really have a threshold, but most of the investors that are purchasing those loans are going to want to see 620 and higher.
Yeah.
And the higher your credit score, the better your debt ratios, the better your rate's going to be. You're going to get those premium rates that aren't afforded to everybody. Mm-hmm. So focus on building your credit. That actually should come before your pre-approval. Honestly, that's like step -1.
Yes.
Getting your credit in order is so important, and know your credit scores. Always know what your score is.
And don't you think there's some credit repair agencies, which I haven't had a lot of experience with them, but lenders can usually recommend those. And they can be really helpful, I think, to get your credit score in a decent range, especially, I think they've changed the rules on medical collections so they don't affect you as much.
Right.
Because those really used to bring your score down.
They really could hurt you. Yeah. So it's good to get in touch with somebody who can help you to make the right moves. Like if you have money to pay things off, they'll tell you which things to pay off in what order, because that will deeply affect how quickly your score can rise too.
And I think sometimes people think, oh, well, I'll close these accounts that I haven't used in a long time. Don't close those old accounts, because the ones that have been around for a long time with a zero balance, when you close them, it has a negative impact on your credit score. You don't think it will. So don't do any funny things, and also don't buy a car right before you
or while you're under
any
contract.
big purchase.
No finance purchases, not furniture, not anything.
Yes.
No, don't pay for your nose job on credit. Like, don't do any of those things.
And also don't do weird things with your bank account, transferring money in and out.
Oh yeah, that's a whole nother episode there. Got to show a paper trail.
Yeah, keep your ducks in a row.
Right.
So should I sell my current home before buying a new one? So this is a question that we get a lot. A lot of people can't buy a new home, and they need the money from the current one.
Yes, they're counting on those proceeds.
Yeah. So, how do you handle that? And that's a sale of home contingency, because you have to sell the current one.
Right.
So if you can just sell it, like let's say, I don't know, you're moving near where your parents live and you're willing to put your stuff in storage. Mm-hmm. I mean, honestly, it's a lot easier. It's a lot easier to negotiate your purchase without a sale of a home contingency.
Absolutely.
Sellers don't love those.
Yeah.
If you have an option like that, or you're willing to sell and move into a short-term rental or something like that, those are all options. But if you need the sale of home contingency, that can be done, and there's things to sort of work around having that and making it less negative, but we try and avoid the kick out clause.
Yeah, and we try to avoid it when we're working with buyers.
Yes.
Yeah. Now
When
with
we're working
sellers,
with
it's a different story.
Then we're throwing in the kick out clause. Yeah. So, but you can, if you need to sell it, then yes. If you don't need to sell it or you have the ability, I mean, you had that happen recently.
Yeah, there's people that, sometimes like maybe you own your home outright.
Yes.
You can actually just refinance your home, take the cash and then buy your new house with it. Or you could get a bridge loan or, you have options.
You can qualify for the new home. So you just use a loan. And then once your other home sells, I mean, the lenders will hate us for this, but you can sell
You can sell it and then pay it off early. Yeah.
Pay off the loan.
They like you to keep it for 6 months.
Yes.
But, that's not always ideal for everybody.
Yeah.
Yeah.
So that's a good option.
And then the last question is, how long does it take to buy a house? I have a story. Back when I first got my real estate license in Maryland, I was working with this couple and they called me and they said, we need to get into a house. Our lease is up Friday. And I was like, so you're looking for another rental? And they're like, well, no, we want to buy a house. And I'm like, okay. So where are you going to go when your lease is up? Mm-hmm. Well, we'll just move into the new house. And I'm like, okay. So we're going to start from scratch here. They weren't pre-approved. They, it was and I didn't work with them for long because the lender told me that they couldn't even buy a Snickers on credit. So, but
so funny.
It does take about 30 to 45 days on average in our area. Now, in other states, there's different processes. Like New York has a longer process involved.
Where there's attorneys involved. Yeah. We're not an attorney state.
No, we're a title state, thankfully. Yeah. So, the standard is 30 days. It can extend to 45. And sometimes it's longer. It depends on what does the seller want.
Right.
What's
Maybe
the ideal
they have
scenario?
kids in school and they want to stay and finish out the school year. And if you can accommodate that as a buyer, that's
And if you're building a new house, it takes a million years. So
yes. And if you're cash, you can usually close very quickly.
Oh, yeah. Super fast. I mean, we've done them in a week before. Yeah.
Yeah. So if the house is vacant and it makes your offer more attractive, it helps with negotiation to know what does the seller want.
That's important.
Yeah.
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 Definitely.
You can maybe knock a few bucks off that way.
Yeah. And here we thought we were going to be talking on and on and on.
I know.
And we have sailed through.
Left. Yeah.
We have sailed through.
Yeah.
So we did good.
All right. So if you have buyer questions or you're looking to buy a home or sell a home, please reach out to us. Our email address is hello@coastalestateteam, or you can call us. 321-422-2160 is our office number, and connect with Kelly or I, and we would love to help you. And we will see you next time.
Yep.
Cheers. Bye.
Sunny days, no clouds in the sky.